Good morning, my name's Ryan Littlestone from forexflow.live. Once again, we're in another big week. We had the ECB last week and now it's the big one of them all to end the summer. And that's the FOMC and the US Fed. Now, the market's been expecting a cut from the Fed for almost 2-3 months now. Expectations have been sitting at 100% that they're going to cut this week. What we've really been trading is in between that is whether they're going to cut by 25 basis points or 50 basis points. The market was hyping up the 50 basis points cut, but that's been scaled down somewhat because of the data we've been seeing out of the US has been pretty good. It could be better, as all data could be, but it's not been horrendous. There's certainly no signs that the economy is collapsing. And as we saw from last week's GDP report, we're seeing soft on the inflation side, which we know about. But the consumer is looking very well. It's quite strong. We know the jobs market is very strong. So really, it's almost as if the Fed are dealing with a two-speed economy, if you like, or several layers within the economy. Some are going well and some aren't going so well. So for them, the balance is really how they react to that. Do they potentially look to cut rates, which will give the consumer even a bigger bounce, give them some stimulus there, just to try and kick up the inflation rate, which is still below their goal. We get a big report tomorrow by the PCE report. That's the main measure that the Fed use for inflation. So that could be a cruncher for anything that goes on Wednesday. So what we need to look at now is the trades and what currencies and what markets are going to move around the Fed when we get the announcement. So one market to look at is bonds, particularly US bonds, because I think that's potentially the cleanest trade over whether they cut, don't cut, or cut by 25 or 50 basis points. Now, as we've spoken about, we know that the market is pricing in a cut. 100% is pricing in a cut. So really, the bigger price risk is if they're not as dovish as the market wants them to be. Or even if they don't cut at all, that's going to send bond yield flying. It's also going to send the dollar flying. So the cleanest trade for that at the moment is looking at something like 10-year yields and going short bonds into the meeting. We're in an area at the moment that's been sort of between the 2%, 2.10% mark. And that's where we've seen the price sort of fluctuating. It's really consolidating there. So if they're not as dovish as the market expects, I'm going to expect yields to pop up through 2.10, even as high as 2.20. So going short bonds potentially into the meeting is going to be the trade to look at there if they're not as dovish as the market expects. Even if the market even if the Fed is as dovish as the market wants, it's hard to see that much downside unless they're going to signal a real rate cutting cycle. Most of us here at Forexflow believe that this one is just going to be pretty much an insurance cut if they make one at all. So next thing we want to look at is the FX pairs, particularly the pound and the euro against the dollar. Now what we want to look for here is anything that sends these pairs higher. So that's going to be the pound rising, the euro rising and the dollar falling. Now what that's going to insinuate is that the market has got its dovish call from the Fed. The reason I'm looking at these pairs is because we've got the pound under the Brexit hammer and we've got the euro under the ECB hammer. Both is leading to pressure on the euro and the pound. So anything that raises these pairs up, that gives these pairs a chance to move higher, is a potential fade into the underlying factors that's going on. So in the case of the ECB and the euro, the market's expecting the ECB to ease. So anything that sends those pairs higher and sends the euro higher against the dollar is potentially a fairly good sell to get into the ECB after that. So that's what we're looking at for the Fed. It's going to be a choppy time, so stay safe. Good luck to you, and I hope you fare well with your trading.